Are you tired of the same old investing platforms? The ones that feel clunky, complicated, or just, well, meh? You're not alone. In today's world, where managing your money should be seamless and empowering, finding the right tools can feel like searching for a needle in a haystack. And that's precisely why we're diving deep into a platform that's been generating a lot of buzz, M1 Finance. But instead of just telling you it's good, or bad, or somewhere in between, let's really dissect it. Let's peel back the layers and see if M1 Finance truly lives up to the hype. Is it the revolutionary platform it claims to be, or just another contender in a crowded market? We're going to explore its core features, its strengths, its weaknesses, and ultimately, help you decide if it's the right fit for your financial journey. Now, before we get into the nitty-gritty, let's understand the problem M1 Finance is trying to solve. Traditional brokerage accounts can often feel overwhelming. You're presented with a vast universe of stocks, ETFs, and sometimes even more complex instruments. You have to manually decide what to buy, how much to buy, and when to rebalance your portfolio. For beginners, this can be paralyzing. Even for experienced investors, it can be time-consuming and prone to emotional decision-making. Enter M1 Finance with its core concept, the pie. Imagine your investment portfolio as a literal pie. You divide it into slices, and each slice represents a different investment, a specific stock, an ETF tracking a market index, or even a collection of stocks. You decide the percentage allocation for each slice, essentially telling M1 Finance how you want your money to be distributed. This pie approach is the heart and soul of M1 Finance, and it's what sets it apart. It's incredibly intuitive and visual. You can see at a glance exactly how your portfolio is structured. Want 50% in a broad market ETF, 30% in tech stocks, and 20% in dividend-paying companies? Simply create your pie slices and assign the percentages. But the beauty of the pie goes beyond just visualization. M1 Finance automates the buying and selling of assets to maintain your target allocations. This is called dynamic rebalancing. Let's say your tech stocks perform exceptionally well, and their slice of the pie grows beyond your initial 30% target. M1 Finance will automatically sell a portion of those tech stocks and buy more of the underperforming assets to bring your portfolio back to your desired percentages. This helps you stay disciplined, avoid the temptation to chase hot trends, and ensures your portfolio aligns with your long-term goals. Now, let's delve deeper into the key features that make M1 Finance stand out. Automated investing. We've already touched on the pie structure and dynamic rebalancing, but the level of automation M1 Finance offers is truly impressive. Once you've set up your pie, you can essentially put your investments on autopilot. You can schedule regular deposits, and M1 Finance will automatically invest that money according to your pie allocations. This hands-off approach is a huge benefit for those who don't have the time or inclination to actively manage their portfolio every day. Fractional shares. Gone are the days of needing hundreds or even thousands of dollars to buy a single share of a popular company. M1 Finance allows you to buy fractional shares. This means you can invest with as little as a few dollars and still own a piece of high-priced stocks. This significantly lowers the barrier to entry for new investors and allows you to fully implement your desired asset allocation, even with limited capital. Customization and flexibility. While the pie structure provides a framework, it doesn't restrict you. You have a high degree of customization. You can choose from a vast library of individual stocks and ETFs, or you can select from pre-built expert pies designed around specific investment strategies or risk tolerances. These expert pies can be a great starting point for beginners or those who want a more hands-off approach while still benefiting from professionally curated portfolios. You can also customize these expert pies to fit your specific needs. M1 Spend and Borrow. M1 Finance goes beyond just investing. It offers integrated banking and lending features. M1 Spend is a checking account that offers a competitive interest rate and a debit card. M1 Borrow allows eligible users to borrow money at competitive rates against their investment portfolio. This integration can be incredibly convenient, allowing you to manage your banking, investing, and borrowing needs all within one platform. However, it's crucial to understand the risks associated with borrowing against your investments, as a market downturn could lead to a margin call. Tax efficiency. M1 Finance offers some features that can help with tax efficiency. For example, when rebalancing, it prioritizes selling the assets that will result in the least amount of taxes. While it's not a substitute for professional tax advice, these features can help optimize your after-tax returns. Cost structure. One of the most attractive aspects of M1 Finance is its cost structure. For the basic M1 Finance Invest account, there are no commission fees for trading stocks or ETFs. This is a significant advantage over traditional brokers that charge per trade fees. They do offer a premium subscription called M1 Plus, which comes with additional features like higher interest rates on the spend account, lower borrowing rates on M1 Borrow, and access to more trading windows. However, the core investing platform is free. Now, let's be balanced. While M1 Finance has a lot going for it, it's not without its potential drawbacks. Limited trading windows. Unlike traditional brokers that offer real-time trading, M1 Finance executes trades during specific trading windows. For the free tier, there is typically one trading window per day. M1 Plus subscribers may have access to an additional afternoon trading window. This means you don't have the ability to react instantly to market fluctuations. For long-term investors, this might not be a significant issue, but active traders who need immediate execution might find this limiting. Less granular control. While the pie structure is excellent for setting and maintaining asset allocations, it offers less granular control over individual trades. You can't specify limit orders or other advanced order types on individual securities within your pie. The focus is on the overall portfolio allocation rather than tactical trading. Customer support. While M1 Finance has improved its customer support over time, some users have reported experiencing delays in getting their issues resolved. As a primarily digital platform, the lack of readily available phone support for all users can be a concern for some. Educational resources. While M1 Finance provides some educational content, it's not as extensive as what you might find on some of the larger, more established brokerage platforms. Beginners might need to supplement their learning with resources from other sources. Reliance on automation. While automation is a major strength, it also means less direct control over individual transactions. If you prefer to have complete control over every buy and sell decision, M1 Finance's automated approach might not be the best fit. With that said, thanks for watching, and until next time.